Good day, Mr. Richard. My name is Satvinder Singh. In today's presentation, I'll walk you through the process of resolving a scenario where a vendor, Sweatwood Enterprise, mistakenly ships 20 units of customizable desks instead of the 10 desks ordered by the customer, Jenny Fletcher. This is basically the first scenario, which is managing the excess shipments in Odoo. This error leads to a return and an invoice dispute. We'll cover how to handle this situation using Odoo Sales, Material Management, and Financial Accounting module. Let's start with the overview. In this case, the customer, Jenny Fletcher, placed an order for 10 customizable desks, each priced at 200 ringgit. The vendor, Swedwood Enterprise, ships 20 units, resulting in an excess shipment. The customer rejects the excess item and a return and invoice dispute arises. Our task is to manage the excess shipment through the system, ensuring the correct stock is accounted for, the return is processed, and the invoice is adjusted accordingly. Now let's begin with the first step, which is the sales module. This is where we manage customers' orders, including quotation and sales order. The first task is to create a sales quotation. In this case, Jenny Fletcher, the customer, requests 10 customizable desks, and we create a quotation listing the product, quantity, pricing, taxes, and terms of scale, which the total amount shown has Rm 42,165 ringgit 10 cent. After sending the quotation to the customer for review via the email, the customer can either accept or decline it. Once the quotation is confirmed, it is then converted into a sales order. A delivery order is automatically created in the inventory module, ensuring that the goods are shipped to the customer. Now, moving on to the material management module, where we create a purchase order for the vendor to fulfill the customer request. To do this, we first generate a request for the quotation RFQ to the Sweatwood Enterprise, confirming the order for 10 desks at 200 ringgit each plus taxes. Once the RFQ is confirmed by the vendor, it is converted into a purchase order. The order details include the vendor's name, product, unit price, and expected delivery date. Upon confirmation of the purchase order, a receipt is generated in the inventory module, indicating that 10 desks are expected to arrive at the warehouse. This sets up the inventory for further processing. Now, once we have confirmed the purchase order, Odoo will automatically created a receipt in the inventory module, and this receipt is linked to the PO, and it's used to record the goods you received from the vendor. And once we have received the shipment from the vendor, we will look into the invoice to ensure that it is matching with the product that the customer has ordered. But in this case, the vendor actually mistakenly shipped extra 10 desks, which is currently is 20. Therefore, we will modify the quantity in the inventory receipt to reflect the actual quantity received. Then we will click the validate button to confirm the receipt of the good into our inventory. Next, we need to process a return for the excess 10 desks. To do this, we go back to the inventory module and create a return order. We adjust the quantity to reflect the 10 extra desks and confirm the return. Once confirmed, a vendor credit note is created, which ensures that the vendor's invoice is adjusted to reflect the return items. The return order generates an outgoing transfer document, which records the return of the excess unit back to the vendor. We validate the return, update the stock, and complete the return process. In the accounting module, we create a vendor credit note to reflect the return desk. We link this credit note to the purchase order for the 10 return desks. The updated payable details are confirmed and the invoice is adjusted. After validating the vendor credit note, we process the payment for the corrected amount, and the payment status is updated as e-payment in Odoo. By registering the payment, the outstanding balance for the vendor is cleared. The system updates the accounting records to reflect the payment made by the corrected invoice. Finally, we move to create a final invoice for the customer reflecting the 10 desks ordered. Once the customer makes the payment, we register the payment in the system and send the payment receipt along with the goods receipt to the customer. This ensures that both the vendor and customer accounts are correctly updated and the dispute over the excess shipment is resolved. In conclusion, this solution walks us through resolving the scenario where a vendor mistakenly ships excess unit. By using Odoo Sales, Material Management, and Financial Accounting modules, we can efficiently manage the quotation, purchase order, inventory, discrepancy, returns, and financial reconciliation. The system allows us to correct errors and ensure that both customer and vendor accounts are accurate, leading to a smooth resolution of the dispute.
Next up, I'll walk you through how to manage a scenario where a vendor's late delivery leads to production delays, customer complaints, and financial impacts. We'll explore how this scenario unfolds in Odoo and how to implement solutions to avoid future delays. Let's first review the first problem. In this scenario, we face a vendor delivering raw materials late. The order was placed on the 1st of April, but the vendor ship is delayed until May 1st. This causes a shortage of material, which impacts production schedules and results in customer dissatisfaction. Additionally, the financial impact includes lost revenue, penalties, and extra costs due to the delay. Now let's simulate this scenario in Odoo. First, we need to configure products and vendors to reflect the late delivery situation. We'll create a raw material product called Component X and set up a vendor called Delayed Supplier LLC with a 30-day lead time to simulate the delivery delay. To begin, we create a raw material product called Component X in the inventory module. The product is set as a storable product with the buy route enable, indicating that we purchase it from vendors. We set the lead time to 7 days, reflecting how long it takes to receive the product after ordering. Then we'll create a vendor, which is called as Delay Supplier LLC in the purchases module with a 30-day lead time to simulate the vendor's delay delivery. This will result in a 30-day delay between the order and the expected delivery date. Next up, we create a purchase order in the purchases module on April 1st. The order is placed with Delay Supplier LLC for 100 units of Component X. The system automatically calculates the expected delivery date based on the 30-day lead time. To simulate the late delivery, we wait until May 1st and validate the receipt of the raw material in the inventory module, confirming the late shipment. Now let's look at how this late delivery affects production. First, we create a finished product, which is product Y, in the inventory module with the manufacturer route enable. Then we create a bill of material BOM linking component X to product Y. The BOM defines how much of component X is required for each unit of product Y. We generate a manufacturing order MO in the manufacturing module for 100 units of product Y with a planned start date of April 10. However, since the raw material is delayed, Odoo will flag a material shortage and prevent production from starting. We then reschedule the MO to May 5th to account for the late delivery of the component X. As a result of the delay, we simulate a customer complaint by creating a sales order for 100 units of product Y with a delivery date set for April 15. Odoo flags this as delayed due to the rescheduled production. We track the complaint by creating a ticket in the help desk module and linking it to the customer and sales order. Next, we calculate the financial impact by creating a journal entry in the accounting module. We debit a penalty expense account and credit accounts payable for the penalty, simulating the financial consequences for the late delivery. Now that we have simulated the scenario, let's implement solutions to prevent such delays in the future, optimize production planning, and mitigate customer dissatisfaction. The first step is to set safety stock for component X. To avoid future raw material shortage, we create a reordering rules for component X in the inventory module. We set a minimum quantity of 100 units and a maximum quantity of 500 units. This ensures we maintain a buffer stock and can automatically reorder when stock falls below the minimum level. By doing this, we reduce the level of running out of materials due to vendor delays. For the minimum and maximum quantity, the minimum quantity is set to 100 units to cover at least 1 month's production, whereas the maximum quantity is set to 500 units to maintain a flexible stock level without overstocking. The second solution is to enable a running MRP in Odoo. Next, we use Material Requirement Planning (MRP) in Odoo to optimize production planning. MRP helps us to calculate the required materials for production and adjust production schedules based on component availability. Here's how MRP works. It checks the availability of the materials required for production based on manufacturing orders (MO) and sales order (SO). If materials are unavailable, MRP suggests procurement actions like creating purchase order or manufacturing orders. MRP adjusts the production schedule, ensuring that we only start manufacturing when the required materials are available. In this case, MRP detects that we need 100 units of component X to fulfill a manufacturing order for product Y. If we only have 50 units in stock, MRP automatically suggests a purchase order for the remaining 50 units. It then suggests that the manufacturing schedule to ensure production starts once the new stock arrives. In conclusion, we have explored how a late vendor delivery can cause delays in production, customer complaints, and financial consequences. Using Odoo's inventory manufacturing and accounting modules, we were able to simulate the scenario and implement effective solutions, including safety stock and MRP to prevent future delays and optimize production planning. By automating these processes, we can reduce the risk of such issue, improve customer satisfaction, and minimize financial losses. Next up, I'm going to walk you through a scenario 3 where a customer exceeds their credit limit and we simulate blocking the sales order until a down payment is made. I demonstrate how this is managed in Odoo and how to handle such situation efficiently. Let's dive into the scenario. In this scenario, our customer placed an order that exceeds their credit limit of 10,000 US dollars. The sales order is blocked until the customer make a down payment. This prevents overexposure to unpaid debts and ensure financial control. I'll show you how we simulate the scenario and implement a solution to unblock the order after a down payment is made. Let us start with simulating the difficulty in Odoo. The goal is to block sales order when the customer exceeds their credit limit, preventing them from placing order beyond the approved limit. Here's how to do with it step by step. The first step is to set a credit limit for the customer. We go to the sales module, click on customer and select the customer, say customer A. In the accounting tab, we set their credit limit to 10,000 US dollars. This credit limit will help us to track and manage the maximum outstanding amount that the customer can owe before they can no longer place new orders. The next step is we simulate the process of creating sales order and manually blocking the order once the credit limit is exceeded. We will create two sales orders for customer A. The first one is within the credit limit and the second one is exceeding the credit limit. For the first sales order, we create a quotation for 78 chairs at a unit price of $100.34. The total amount comes to 9,050 US dollars, which is well within the credit limit of 10,000 US dollars. After confirming this sales order, it is processed and approved because it doesn't exceed the limit. For the second sales order, we simulate the customer trying to place an additional order for 18 chairs at the same unit price. The total for this order comes to 2,077.04 US dollar cent, which brings the cumulative total to 11,077.54 US dollars, exceeding the 10,000 US dollars credit limit. Since the second sales order exceeds the credit limit, we manually block it. In the sales module, we open the second sales order and change its status to block. We also add a note that explains the reason for the blockage. For example, the order is blocked, cumulative total exceeds 10,000 US dollars credit limit. This ensures that no further action is taken until the issue is resolved. Now that we have simulated the scenario, let's implement the solution. The solution here is to allow the customer's order to proceed after they make a down payment. I'll walk you through how a down payment works to unblock the order. We start by creating a sales order for customer A, including the chairs as part of the order. The total amount comes to 10,000.50 US dollars, which exceeds the credit limit. To resolve this, we add a down payment product of 1,000 US dollars to the sales order. This brings the total amount back within the approved credit limit. Once the down payment is added, we create an invoice for the down payment amount. In the sales module, we select the down payment fixed amount option, specifying the down payment has 1,000 US dollars. This generates a draft invoice for the down payment, which we confirm and create in the system. After creating the down payment invoice, we register the payment. This payment is processed and recorded under the prepayments account. The invoice status changes to posted, confirming that the down payment has been officially received and recorded. The payment status is marked as in payment, indicating that the payment is being processed. Once the down payment is registered, the sales order is automatically unblocked. This allows the remaining portion of the sales order to be proceed. The down payment reduces the customer's outstanding balance, and we can now process the remaining balance of the orders for the chairs. Finally, once the order is unblocked, we can prepare the goods for delivery, the stock is checked, and we confirm that the products are ready for transfer. We generate the final invoice, which reflects the amount due after subtracting the down payment. In conclusion, we have seen how Odoo allows us to effectively manage credit limits and prevent customers from exceeding their approved limits. By implementing a system that automatically blocks sales order and allows them to proceed with a down payment, we ensure that the business doesn't take on excessive financial risk while still accommodating customer needs. After processing the goods invoice, we generate the final invoice, whereby the total amount for the sales order is what 10,000.50 US dollars. The down payment 1,000 has already been invoiced earlier. Therefore, the remaining balance is to be paid is 9,000.50 after subtracting the down payment of 1,000. Then the user will actually make a payment, and this will be the in payment status. Next up, I'll walk you through the scenario 4, whereby a vendor ships the wrong product and the mistake is discovered only after the product has been used in production. The incorrect product is aluminium bolts, which is represented in ABC, but the correct product should have been stainless steel screws, which is represented in XYZ. I'll show you how this mistake is handled in Odoo, from setting up the products to taking corrective action. Let's dive into the scenario. In this scenario, the vendor ships aluminium bolts instead of the correct product, which is stainless steel screws, for producing bicycle frames. This mistake was only discovered after the production process, and the wrong components were already being used in the production of the bicycle frames. Our goal is to demonstrate how this error is identified and rectified using the Odoo system, ensuring that the correct materials are used and inventory is updated accordingly. Let us start by setting up the problem in Odoo, simulating the situation where the wrong product is received and used in production. We will create the products, set inventory levels, and set up the bill of material BOM for bicycle frames. First, we create the incorrect product, aluminium bolts. In the inventory module has a storable product, we set the on-hand quantity 200 units for aluminium bolts to simulate the stock. These bolts are incorrectly received from the vendor, and we track them as part of the bills of material BOM for bicycle frames. Next, we create the correct product, stainless steel screws, also has a storable product with on-hand quantity of 200 units. These screws should have been shipped by the vendor but were incorrectly replaced with aluminium bolts. Now we create the bill of materials for the bicycle frame, which is the final product being produced. The BOM list aluminium bolts has a required component even though they are the wrong product. This means when we create a manufacturing order MO for the bicycle frame, Odoo will automatically reserve 100 units of aluminium bolts based on this BOM. To do this, we go to the manufacturing module, click on bill of materials, and create a new BOM for the bicycle frame. The BOM specified that 100 units of aluminium bolts are required to produce the bicycle frame, and we save the BOM. Next up, we create a purchase order PO for the aluminium bolt from the vendor to track the procurement of the wrong product. The PO ensures that we can manage and track the delivery of the aluminium bolts even though they are not intended material for bicycle frame production. When the aluminium bolts are delivered, we verify the product and quantity. We receive 100 units of aluminium bolts into our inventory, and we confirm the receipts in Odoo. The receipts is linked to the purchase order, and we validate the delivery to update our inventory. At this stage, the wrong product has been received and added to stock, which is tracked in Odoo. Now let's create the manufacturing order MO for producing bicycle frame. Since the BOM incorrectly lists aluminium bolts, Odoo will check the inventory and reserve the required 100 units for production. The manufacturing order is created, and once it's confirmed, the system will reserve the aluminium bolts and use them for production. We initiate the production of the bicycle frame even though the wrong product is being used because the aluminium bolts were mistakenly included in the BOM. Once the production is completed, we realize that the wrong components, aluminium bolts, were used. Now we need to take corrective action to resolve this mistake and ensure the right products are used moving forward. The first corrective action is to scrap the defective bicycle frames that were produced using aluminium bolts. In the inventory modules, we go to the operation module, into the scrap orders, create a scrap order for the defective bicycle frames and confirm the scrap. This removes the defective frames from inventory and ensure that they are not being used. Next up, we process a return for the aluminium bolts to the vendor. In the purchase module, we locate the delivery receipt for aluminium bolts and create a return. We specify the quantity of 100 units and select the reason for return as wrong product shipped. After confirming the return, the system generates a stock transfer to reflect the returned goods. To prevent this mistake from happening again, we need to update the bill of material BOM for the bicycle frame. We go into the manufacturing module, edit the BOM, and replace the aluminium bolts with stainless steel screws as the correct component. We also update the quantity to 200 units as per the requirement. The updated BOM now reflects the correct product for manufacturing bicycle frames. With the BOM updated, we create a new purchase order for stainless steel screws from the vendor. This ensures that we are now procuring the correct product for bicycle frame production. The purchase order is confirmed and the expected arrival date for the screw is set. Once the stainless steel screws are delivered, we confirm the receipt of 100 units in the inventory module. The correct material is now in stock and we can proceed with the production of bicycle frames using the right components. Finally, we create a new manufacturing order MO for the bicycle frame using the updated BOM with stainless steel screws. After confirming the MO, we reserve the correct materials, start production and complete the manufacturing process. This ensures that the final bicycle frame is produced using the correct component. To summarize, we have seen how Odoo helps us manage the entire process of handling incorrect product shipment, from setting up the products and creating the BOM to scrapping defective goods and updating the system with the correct components. Odoo provides a comprehensive way to track and fix error. By following this corrective action, we can ensure that our production process runs smoothly and that we avoid using incorrect materials in the future. Thank you. That's all from me.
Hi, greetings everyone. My name is Minghui. So now I'm going to talk about scenario 5, 6, 7, and 8, as well as the financial impact of our simulation. So in scenario 5, we are basically dealing with a discrepancy in the vendor bill and also how to recover our production by using an alternative supplier. So the product involved in this scenario is a customizable desk, which we have already set it to make to order in Odoo, as well as the manufacturer route in the product form of this customizable desk. So in order to manufacture a customizable desk, we will need wood panels, metal legs, M5 screws, and also varnish paint. And in terms of the operations involved, to actually build a customizable desk, we will need to assemble the metal legs, wood panels, and whatnot before sending the desk for coating and packing in the proper packaging. So over here, we have mentioned that wood panels is actually one of the important components to manufacture a customizable desk. So in the product form of wood panels, we have actually assigned two suppliers, Supplier A and also Gemini Furniture, whom we can actually purchase the wood panels from. So in this scenario, we will simulate a situation in such that Supplier A has actually sent us the wrong vendor bill, in which the vendor bill is actually has the wrong amount being charged to us, and for that we actually have to use Gemini Furniture in order to prevent any production impact to our company. So here in this scenario, our company has actually placed an order for 50 units of wood panels from a supplier at 100 ringgit per unit. So this is 5,000 ringgit in total to fulfill the sales order S0081 placed by Deco Edit for 50 units of customizable desks. However, when supplier A sends the invoice, it is actually incorrectly priced at 500 ringgit per panel instead of 100 ringgit, thus resulting in the total invoice inflated to 25,000 ringgit. So how do we resolve this? If you can see, this is actually the sales order placed by our customer, so 50 units of customizable desks. So once we confirm this sales order, a manufacturing order will be generated automatically. Since this is actually an MTO product, MO, SO, and also PO will be generated automatically. So over here, you can see that P0030 is the purchase order being issued to Supplier A to purchase wood panels, and then P0031 has been issued to Azure Interior, another supplier of ours, to purchase metal legs, M5 screws, and varnish paint. Over here, you can see that when we place the order to Supplier A, which is P0030, we have clearly stated that the unit price agreed upon is 100 ringgit per wood panel. But when the supplier sends us the wood panels and sends us the vendor bill, you can see that the unit price has actually been charged at 500 ringgit per panel instead. So having discovered this, our procurement team actually blocked this particular vendor bill. So in Odoo, the procurement team has actually changed the status of should be paid from yes to no. So this is in order to block any payment or automatic payment to this vendor bill. So with that, our procurement team actually escalates this issue to the management for further resolution. So while waiting for the procurement team to settle this issue with Supplier A, we received another sales order which is S0082, being placed by Deco Edit for 100 units of customizable desks. So this 100 units of customizable desks needs to be shipped by week 8, which is next week. So in order to avoid impacting any shipments, we make sure that extra POs are actually placed upfront with respective vendors. So over here, you can see that in our master production schedule, even though MTO orders are not meant to be used with master production schedule, you can see that the schedule will actually suggest us to replenish 50 units of customizable desks by week 7 and also 100 units of customizable desks by week 8. And along the schedule itself, it has also listed whether we need to replenish any of the components like metal legs, M5 screws, varnish paint, wood panels, and whatnot. So in order to reduce or avoid any impact to our shipment, we have decided to use Gemini Furniture, which is our alternative supplier for wood panels. So for Gemini Furniture, unfortunately, the price is slightly higher at 130 ringgit, but their lead time is around 1 day. So this is good news for our production. So this is actually the purchase order, P0034, being issued to Gemini Furniture at 130 ringgit per wood panel. So luckily, with the fast lead time from Gemini and also components arriving from other vendors, we managed to kick off the manufacturing order to finish or complete manufacturing 100 units of customizable desks. So this allows us to actually meet the demand for week 7 and week 8. Now, after much negotiation and also escalation, the supplier A has finally agreed to cancel the original bill and also issue a corrected bill with the corrected amount. So over here, you can see that the original vendor bill from supplier A has actually been cancelled in Odoo. So we are not overpaying for this particular bill. Instead, the suppliers has agreed to issue a new vendor bill with the corrected amount. So over here, this is 100 ringgit per wood panel, which is the correct amount that we have agreed in our PO previously. So our company promptly paid this bill on time and ensured that we did not overpay for any bills. As for scenario 6, we'll be dealing with bulk order with advance payment. So the product involved here is bookshelf, which can be manufactured in-house as well. So in order to produce a bookshelf, basically we just need 4 side panels and also 8 M5 screws. And we don't really have a lot of operations for a bookshelf. Basically, to build a bookshelf, we just need to assemble the side panels together. Now, side panels is actually one of the key components for bookshelves. So Wood Corner has actually been assigned as our vendor for side panel. We have been buying from Wood Corner using bulk orders for other products as well. It's just that with Wood Corner, there's only one condition, which is that we must always pay 50% upfront payment before they ship the products to us. So here, take note that our bookshelves are only set to the manufacturer route without using MTO, and the side panels are actually set to buy with blanket order being enabled. So over here, we have actually set up a blanket order, all right, with Wood Corner in order to purchase the side panel. So here we have actually set 1,000 units in order for us to meet the production in 3 different weeks. So the agreement is like this. Wood Corner will have to ship 1,000 units to us over 3 months on week 7, 8, and 12. But the payment condition is that we have to pay them 50% in advance before Wood Corner will ship the side panels to us. So with that, we enter the forecasted demand for bookshelf into our MPS. So 50 units of bookshelf will be produced in week 7, 100 units in week 8, and then 100 units in week 12. So over here, let me just give you a glimpse of what the MPS looks like. So here we basically enter the forecasted demand for bookshelves. So 50 units in week 7, 100 units in week 8, and also 100 units in week 12. So over here, the MPS will actually show us what is the suggested replenishment for components like side panels and M5 screws. So over here, you can see that for side panels, we already have 10 units available in inventory. So the suggested replenishment is 190 units instead of 200 units as forecasted. So with that, we actually issue the first purchase order through the blanket order that we have created with Wood Corner. So over here, the first purchase order, we only purchased 190 units instead of 200 units since we already have 10 side panels available on hand. So this is actually the first PO being created through the blanket order. And this PO also includes the 50% advance payment requirement before shipment. So how we deal with this is that since 190 units of side panels will require around 6,555 ringgit in total, inclusive of 15% tax. So the advance payment, 50% of it will be around 3,277 ringgit. And this is actually recorded under accounts payable. So how we did this is that the supplier will first issue us a vendor bill, whereby it has actually stated clearly that there are two installments involved. So the first installment over here is that 50% of it is due before they ship the orders to us, before they ship the products to us, and then the second installment should be paid after they ship the side panels to us. So over here in this vendor bill, we managed to pay the first installment when we place the order. So 50% of it has already been settled. So once that's done, Wood Corner actually shipped us the 190 units of side panels. And once we receive the units, all the side panels in good condition, we pay them the second installment, 3,277 ringgit and 50 cents after we receive the units in good condition. So once that's done, we kick off the manufacturing order to produce 50 units of bookshelf for week 7. And these same steps are actually being repeated for week 8 and week 12 so that we manage to complete the bookshelf production in time. So basically, that's how we deal in scenario 6. So for scenario 7, basically we are dealing with damaged shipment and how to get the compensation from our carrier. So in this scenario, the product involved is bookshelf, whereby our customer Decor Addict actually ordered 6 units of bookshelf with the shipment being split into 2 deliveries. So the first shipment will contain 3 units being shipped on week 7. So the original carrier was the Post, and shipment 2, 3 units on week 8. So originally planned by using the Post, but later we changed it to FedEx. So the issue over here is that upon arrival, the customer found out that 3 bookshelves in shipment 1 are damaged due to mishandling by the Post. So basically how we're going to solve this scenario is that we are going to charge the Post for the 3 damaged bookshelves, and then we'll ship 3 replacement units to Decor Edit. So this will be done via shipment 3 by using FedEx instead of the Post. So over here, we are also going to update shipment 2 to use FedEx instead of the Post, and then track the compensation separately in Odoo accounting. So how we actually do this is that before we start the simulation, we take one extra step to set the Post as a customer since they need to compensate us. So for FedEx, it will remain as one of our default carriers. After that, we then create a sales order to ship 6 bookshelves as 00101 and actually split the deliveries to the customer into 2 delivery orders. So over here, you can see that this is the sales order being created. So Decor Edit has actually placed an order for 6 units of bookshelf. And over here, we are using the Post as our original carrier with a shipment fee, postage fee of 244 ringgit and 44 cents. Now, this is the first delivery order being created for week 7. Basically, we ship 3 units using the Post. And then the second delivery order is being created for week 8. So it will also ship 3 units of bookshelf subsequently. Now, once we have shipped the first 3 bookshelves using the Post, in Odoo itself, there will be one extra line over here showing that, okay, 3 units of bookshelves have been shipped to the customer, but it has not been invoiced or paid by the customer yet. And the Post is actually the original carrier in this scenario. Now, the thing is, after we shipped 3 units of bookshelves to the customer actually came back to us complaining that all 3 units were damaged due to rough handling by the Post. Plus, they have CCTV footage as evidence. At this point, the 3 units are not paid by the customer yet. So from here, we create a customer invoice for the Post, whereby we charge them for the 3 bookshelves being damaged, plus the shipping fee and the taxes being paid. So the total price over here is 1,000 ringgit and 74 cent, 1,074 ringgit. Now, due to high level escalation, the Post management agreed to pay in full. So this is actually the customer invoice or so-called compensation invoice that we issue to the Post. Now, this is actually involves the 3 bookshelves being damaged and also the shipping fee that we originally paid to the Post. So total is 1,074 ringgit. After that, we create a credit note for Decor Edit to acknowledge the damaged shipment and get the customer to return the damaged units to us under this particular RMA number. So note that we mentioned that Decor Edit hasn't paid anything for the bookshelves itself. So the credit note in this case has been issued to act as a record rather than a refund. So this credit note, why we issue it is because we want to reverse any financial impact for Decor Edit. So actually this is the credit note being generated. So the credit note over here includes the 3 units of damaged bookshelf as well as the postage fee or the shipment fee incurred by the Post, which is around 244 ringgit and 44 cents. And then once that's done, we also issue this IMA number to our customers so that they can actually return these 3 units of damaged bookshelf, which we then charge to the Post using the compensation invoice that I've shown you just now. So once this is done, we modify the original sales order, which is S00101, to change to a different carrier, which is FedEx with free shipment, and also create a new delivery order in order to ship 3 replacement units of bookshelves to our customer. And the second shipment that we plan for week 8 is then modified by using FedEx as well. So over here, you can see that this is the second delivery order. originally we planned to use the post, but then we changed the carrier to FedEx. So FedEx will be the one who ship these 3 units of bookshelves to Deco Edit instead. And then we also created a new delivery order to ship 3 replacement units to Deco Edit using FedEx as the carrier as well. So once this is done, we finally issue the final customer invoice using FedEx as the new carrier, since FedEx agreed to provide free shipment, so we are not charging anything in terms of shipment, and we only charge the customer 6 units of bookshelves as specified in the original sales order. So this is how we manage scenario 7. Lastly, for scenario 8, we are dealing with a wrong BOM being set up in Odoo and also handle the customer returns. So the product involved over here is a silver white D-shaped office desk. So this D-shaped office desk actually comes in 2 variant or 2 colors. One is a silver white color and another one is a white color. So both of them are priced at the same selling price, which is 1,200 ringgit. Over here in this scenario, we configured both D-shaped office desks as non-MTO or non-make-to-order products. Both variants are actually built in-house with the same components and process flow, except for the different colors being painted during the coating process. So depending on the customer's orders, if the customer is looking for white desk, they will paint the office desks as in white. And if they're looking for silver white, then we'll paint them in silver white. However, in this scenario, when setting up the BOM, our engineer actually forgot to specify the product variant for each BOM and only specify the color of each variant in the reference column. This will actually cause an error later, as the SO and MO manufacturing order will automatically use the first BOM by default, which actually calls for white paint. So over here, you can see that this is a list of BOM for the D-shaped office desk, and white BOM is actually being listed on top. So whenever we generate an MO, the white BOM will be called instantly. So over here, just to show you, when our engineer set up the BOM for these 2 different variants, so our engineer actually forgot to specify the product variant, but instead he only manually entered the color of the desk, color of the office desk in the reference column. And the same goes for silver white. So for silver white office desk, the engineer also forgot to specify the product variant. So this will actually result in an error later. So over here, when a customer calls Jenny Fletcher actually place a sales order as 001008 for 5 units of silver white desk. All right, silver white desk. The wrong BOM is actually called because white color variance is automatically selected. Now, even the master production schedule also cannot detect this error, as the white BOM is called by default. So over here, you can see that even though in the MPS, even though we are looking at the silver white variant of D-shaped office desk, when the planner clicks on the replenish button, all right, the replenish button will actually result in the system creating manufacturing order and also purchasing order via MPS. So even though we're looking at silver white, the white variant BOM is called immediately, even though we're talking about silver white variants. Now, over here, you can see that in the manufacturing order created, all right, by MPS, even though we are calling for silver white desk, but then the white BOM will be used instead. So this has actually resulted in error. The issue also went unnoticed in the production floor because everything was produced according to BOM, which actually calls for white color. And over here, this is actually the first delivery order being shipped, even though on paper we are saying that we are shipping silver white desk to the customer, but then we are actually shipping white painted desk to the customer instead. So having found out this issue, the customer is now asking to return 5 white desks and demands 5 silver white desks as replacements. So in order to salvage this office desk, we actually propose to rework or repaint this desk into silver white color instead. So how do we handle the rework in Odoo? First off, after identifying the root cause of the error, our engineer quickly amended the BOM for the D-shaped office desk. Now each variant, white and silver white, is linked to the correct BOM and routing operations. So for instance, if we are dealing with white desk, then we make sure that the product variant is actually calling for the white BOM. And the same goes for silver white variant. So if we are talking about silver white, then we make sure that silver white BOM is linked to the system correctly. So with that, we create an RMA number so that the customer can actually return the 5 office desks to us. And these 5 office desks are actually returned to a new location called the rework location. And in order to trigger a rework process, we actually created a repair order, okay, RO00004, and this is actually managed using the repair module in Odoo. So here in this repair order, we make sure that the repair order is linked to the RMA movement. which we have shown you just now. So this RMA number will show us where the 5 return desks are located at. So basically, these desks are located at the rework location. And at the same time, we are also going to use a silver white pane. So however, we also added repair notes or rework instructions over here, making sure that our staff will repaint the desk to silver white instead of white color. Now in this scenario, since we don't have a silver white paint, we only have the white paint instead. So we ordered this particular paint from our vendor, which is shipped to us under this PO, P0055. So once we received the silver white paint, we created an internal stock move transfer to move these 5 units of silver white varnish paint from our stock location to the rework location. So we make sure that the silver white paint is also located in the same rework location so that the repair order can actually pass the material availability check. So over here, this is the PO that we issue to our vendor to buy 5 units of silver white varnish paint. And then once we receive the paint, we created an internal transfer to transfer these 5 silver white paints from the stock to the rework location. So once that's done, then we proceed to complete the rework order. And once all the desks has been repaired or reworked, then it will be moved from the rework location to the stock location. And from here, we then create a new delivery order. All right, we then create a new delivery order to ship the 5 units of repair desks from the stock location. And this delivery order is actually linked to the original sales order, which is S00108. Now, this is the completed sales order, whereby we managed to ship out 5 units of silver white desks, and these desks have already been repainted to silver white. And this is actually the invoice that we issue to the customer without any extra rework cost. So eventually, we only charge the customer for the 5 silver white desks that they purchased originally. So this is how we deal with scenario 8. So now that we have simulated all 8 scenarios, let's take a look at the financial performance of our company. For the first financial statement here, which is the balance sheet, as of 28 February 2025, we have a total assets of around 60,000 USD, and then total liabilities of around $6,800, and then the total equity around 54,000 USD. So some of the key highlights here is that we have a very strong equity position, as our company's equity around 54,000 USD is significantly higher than the liabilities of around 6,800 USD. This shows that we have a very good financial stability. And then we also have a very low debt to equity ratio, 0.13. This indicates that we are not heavily reliant on debt, thus reducing the financial risk. And our business is also holding around 14,000 USD in cash and 46,000 USD in other current assets. This shows that we have enough liquidity to cover short-term obligations. So next is the profit loss statement, which is generated for our simulation period from 9 of February to 28 February. So over here, some of the key highlights is that our cost of revenue is around 12,000 USD. This represents the direct cost associated with producing or purchasing goods sold during this period. And you will notice that we also have a relatively low COGS, only about 23.3% of the total income. This is due to our company has been selling high margin products with minimal direct costs paired with low cost sourcing strategies. And with that, we have a very healthy gross profit margin around 76.7%. This is calculated as a gross profit over the total income. So this margin suggests that the cost of goods sold is well managed. And then we also have very minimal operating expenses, but there was a penalty expense of around $500 being incurred due to the vendor's delay shipment in scenario 2, and thus a delay in payment to the vendor. Following that, we have a cash flow statement, which is also generated for the same simulation period from 9 of February to 28 of February. So you can see that over here, where most of our cash is coming from operating activities with very minimal outflow due to investing or financing activities. And over here, some of the key highlights is that we have a very positive operating cash flow. So around 40,000 USD shows that our company generates sufficient cash from our core business activities. We also have very high cash reserve, as the closing balance of $68,000 suggests strong liquidity. And we don't have any major investment or financing activities, as the cash flow mainly comes from our operations with no significant investment outflows or financing inflows. Thus, this is good for operational stability. So in short, our Odoo simulations focus on managing inventory, purchases, manufacturing, and financial transactions. Some of the key scenarios that we managed to avoid major financial losses include scenario 3, where we set a customer credit limit to prevent excessive receivables and bad debts. And then in scenario 4, production delays due to incorrect shipments were managed efficiently. And then in scenario 5, invoice discrepancies and vendor payment disputes were handled effectively as well, thus avoiding unnecessary cash outflows. And then in scenario 6, we make sure that advance payments for supplier purchases were handled properly to ensure material availability while maintaining proper cash flow. So in short, most of our scenarios appear to have led to a profitable and financially healthy business. And that's all from us. Thank you very much.